Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, May 5th, 2023. It's now 6:05 a.m. Central Time. We start off in the S&P 500 daily chart into DeMark, looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 chart has printed the combo and sequential buy setup 2 count. And to negate that for end of day today on the 5th, there must be a close above 4167.87 for the price flip to the sell setup count 1. The S&P 500 has experienced a shift of D wave from 4 to 2. The 2 has shifted from here to where the 4 printed over here. And here's a snapshot of yesterday's video. So you can see the 2 over here, and when price went lower than this low over here, it shifted over, meaning the 2 shifted over where the 4 should have printed. And the next possible shift that could occur for the D wave is if price and this 2 exceeds the low of this low over on the 13th, so a tick lower than that, and the C will turn into a 0 over here. And price in the pre-market hours for the S&P 500 at 6:12 a.m. Central Time on the 5th is 40.87. Next up is Megaphone pattern. There's one that started back here on the 24th of February and ended with the 6 up here. So the megaphone for that pattern will print a 7 on a tick lower than this low on the 13th. And then going the other way, there's a megaphone pattern that started here on the 4th, and that printed the megaphone 6 end count here, and the megaphone 7 will print with a tick higher than this high on the 1st. So it's megaphone 7 that we're looking for and pay attention to. All the other megaphone patterns starting with 5 are just a lead to the megaphone 7. So that's the one we pay attention to. And it too, like other DeMark indicators, such as D wave, some particular waves, can continue moving upwards in a mechanized fashion. So once it prints the megaphone 7 end count, it can keep shifting upwards, or in this case over here, downwards, but is an indication of trend exhaustion. And when taken with the sequential and combo 13 countdowns that could print and the megaphone 7, then you know that trend is really getting exhausted to either way, upside or downside. So now D wave is on the D wave up wave 3, and that's the best of the 2 waves to be on, and that's being on the 3 and 5 wave. So this is a good wave to get on board with, but again, it can travel in a mechanized fashion as we discussed, and could print a 0 down if it passes that low down there. So that's always something to watch for. And the waves have been very shallow. As you can see, it gave it a chance for the 2 to shift over because it was so close to where the 3 wave was up here. And price nailed the lower Stark band and exceeded it a little bit over here and closed above it. And this demand line was qualified yesterday on this bar also. It would have had to open and close underneath it, and it obliged by opening underneath the demand line and closing underneath it, actually a slight gap down from the previous bar. And it doesn't look like really any danger of getting the qualified demand line confirmed, it would have to open lower than this close and tick lower than this low and then close lower than this close. And the only level in danger of becoming qualified for end of day today on the 5th would be this 50% propulsion momentum up, which has bumped up slightly. So it's at 4142.80 and would need to close above that level to get qualified. And the baseline ticked up a little bit, and the conversion line stayed the same, so that gap is narrowing. And if the baseline crosses back above the conversion line, then we'll be considering that we're in a for real downdraft that could get serious. So the first hurdle is this baseline here, and that's at 4093.23, and price is now at 4091, so it's hesitating right there. It needs to get above 4093. If it does that, it has the conversion line to contend with, and the middle band of the Stark band in dashed blue, that's a 9 EMA on the conversion line and a simple 9 on the mid band of the Stark bands. So if price decides to continue going down today, that means it would exceed the lower Stark band to the downside, and then the channel 3 low is there at 4028.37, and that would definitely be a decent area to get on board for some longs, if alone just by being under the lower Stark band for 2 days. So once it does that and exceeds this for 2-3 days, it's really bounce worthy. And there's the floor here on the channel 3 low, so I'm not really worried about it. And price is now on D wave up wave 3, so there's a lot going on here, and to me it looks like a decent chance for some up move. The NASDAQ 100 NDXHILO chart shows the index itself in dotted here in the thumbnail has hooked around and went up, and the 21 EMA in gold right here never did get breached by the red 10 EMA, and now the 5 EMA in blue is hooking around and wants to try to get back above it. And let's see if it gets back above its red 10 EMA in the next couple of days. ROC 12 is at negative 4.48, so it's within the plus or minus 5 of 0 zone that I would consider turning around and going the other way, meaning buying to cover the shorts that I have put on. And the long-term KST for the NDXHILO is still headed up halfway decently. Intermediate term is still headed down, and the short-term KST has the ever so slightest inclination of pulling back on the stick and trying to get back above 0 in its signal line. And the NASDAQ composite itself, NAHILO, best viewed in the main window here. You can see the blue under the red under the gold. So it's got that rainbow pattern going on to the downside. Both price lines for the NASDAQ 100 and the composite are headed down. And the ROC 12 is well below 0, negative 28.15. And there's no inclination whatsoever of the composite index for the high-low hooking around and headed back up like the NASDAQ 100 did. and all KSTs are pointed down, short term, intermediate term. Maybe the long term is trying to pull back on the stick and plane out to go horizontal first before it heads up. And the New York high-low, NYHILO, looks like the red has just crossed under the 21 EMA in gold. So we have the 5 EMA below the red EMA 10 and the red 10 EMA below the gold 21 EMA. So that's just starting to form that downwards rainbow pattern. And again, no inclination whatsoever of the New York high-low index and dotted here hooking around and heading up, similar to the NASDAQ composite. And the ROC 12 is well below zero at negative 25.01. And the short, intermediate term, and long term KSTs are all headed down, maybe even more of a downward inclination on the long-term KST here than in the NASDAQ composite. So it's the big fat cap mega techs that are going to take us there in the NDXHILO. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily baseline. The weekly diamond bottom extension perfect uptrend channels bottom line R2 and R1, and price in the pre-market hours for the S&P 500 at 7:19 a.m. on the 5th is 40.88. So to the downside is the daily horizontal support, the 50 EMA, the top of the cloud 26 bars back concerning the lagging line, the lower Stark band, and S1. And to the immediate upside is the daily conversion line at 41.18, just about. The S&P 500 and NASDAQ 100 AD lines are still below their 21 EMA signal lines, respectively. The ROC 1 is at negative 72 and going sideways. And that's happened about 3 or 4 times that I know of. And every time it goes sideways indication like this, there's always ensuing upside. ATR2 is at 50.59 and pointed down, just about to get back under its volatilities line and back into the green zone. And the PPO extreme is at 0.98% above zero, just about 1%. So to the downside there is 0 PPO level 7, and to the upside is the PPO level 6 at 1.67%. And the New York traditional McClellan breath oscillator to get back to zero would require 2,875 advancers over decliners to get back to zero. So that's getting way up there in almost every single instrument in the New York composite. It's about 3,500 in the composite, and it took a pretty good jump from yesterday's level at 2091. Have a great day.